Microsoft. You know the name, right? It's one of the biggest and most valuable companies on the planet. But when you look past the headlines and the huge stock price, is the business actually getting stronger? That's what we're here to figure out. We're going to dig into the numbers, the revenue, the profits, all of it, to see what's really going on under the hood. And just so we're clear, this is all for educational purposes. All right, let's get into it.
Okay, let's kick things off with a number that is, well, it's just staggering. $282 billion. That's what Microsoft pulled in as revenue for fiscal year 2025. I mean, that's a number so big, it almost doesn't feel real. It definitely puts them in a very, very small club of companies worldwide. But, a huge revenue number is just the start of the story.
So the real question is, what's hiding behind that giant number? I mean, where does all that cash come from? How much of it do they actually get to keep as profit? And maybe most importantly, what are they doing with it to make the company even stronger down the road? To get those answers, we've got to look at the story their financials tell us. All right, so to really get a handle on the Microsoft we see today, we need to rewind a bit. The transformation this company has gone through over the last couple of decades is, honestly, pretty incredible. It's a shift from being the king of the PC to a dominant force in the cloud. We're going to see exactly how that change has completely reshaped where their money comes from. Okay, check this out. This table tells a fascinating story. Take a look at that first decade, from 2005 to 2015. Yeah, revenue grew, which is good, but look at net income. The profit, it barely budged. It was totally flat. Now, look what happens in the next decade, from 2015 to 2025. It's a completely different story. Revenue more than triples, and profits, they just explode. We're talking more than 8 times bigger. So what happened? Well, it comes down to where that $282 billion pie gets sliced. It's mainly 3 big pieces. You've got productivity and business processes, think Office, LinkedIn. Then there's the big one, intelligent cloud, that's Azure. And finally, more personal computing, which is your Windows and Xbox. And this chart really puts that growth into perspective, doesn't it? I mean, this isn't just a gentle slope upwards, it's like a rocket launch. The engine behind this massive acceleration, it's that intelligent cloud business. Sure, all the parts of the business are growing, but cloud is in a league of its own. This is what completely changed the game for Microsoft. They went from selling you a copy of Windows or Office once to selling you recurring cloud services that just keep growing. But here's where things get really interesting. This is the net income, the actual profit after everything is paid for. And to understand how this happened, you got to look at something called margins. Think of it this way. Gross margin is the profit you make just on the stuff you sell. Operating margin is what's left after you pay for running the business, salaries, marketing. And net margin is the final piece of the pie that's left for you. The key thing for Microsoft is that all these margins have been getting bigger, especially over the last 10 years. Why? Because selling cloud services is way more profitable. So for every single dollar that comes in, more and more of it is turning into pure profit. And that is the secret sauce behind this insane profit growth. Okay, so revenue is booming, profits are soaring, that's awesome, but what about the company's foundation? Is it built on solid rock or on sand? The answer to that is on the balance sheet. It's basically a snapshot of what a company owns versus what it owes. And let me tell you, when you look at Microsoft, you see they've built an absolute fortress. So when we talk about assets, what does that even mean? Well, simply put, it's everything the company owns that's worth something. Cash in the bank, investments, but also big stuff like data centers and even their software code. For us, looking in, the most important things are cash and stuff that can be turned into cash quickly. Then, on the other side, you've got what they owe, the liabilities. The big one there is usually debt. And the balance between that cash and that debt, it tells you almost everything you need to know about how financially healthy a company is. And no surprise here, just like revenue and profit, their pile of assets has gotten massive. But let's dig into that 2025 number for a second. Inside that huge $619 billion figure is an incredible amount of cash. So much so that if you take all their debt and subtract it from their cash, they're left with what's called a net cash position. What does that mean? It means they could write a check tomorrow, pay off every single penny they owe, and still have billions and billions of dollars left in the bank. That is a position of unbelievable financial strength. And hey, don't just take my word for it. The professional risk assessors, the big credit rating agencies, have looked at all this. And you know what they said? They gave Microsoft the highest possible rating you can get, AAA. It's basically the ultimate seal of approval. It says this company is about as financially solid as it gets, an absolute rock. So we've got the picture, right? Insane revenue, huge profits, and a balance sheet that's built like a tank. But how does that engine actually run day to day? How do they turn those paper profits into actual cash? Cash they can use to grow the business or give back to shareholders? Well, that all comes down to one thing, cash flow. And this right here, this was the turning point. When Satya Nadella took over in 2014 and pivoted the entire company towards cloud and AI, it didn't just boost revenue. It opened the floodgates for what's called free cash flow.
Now, free cash flow is the real deal. It's the cash left over after you've paid all the bills and reinvested in the business. It is the absolute lifeblood of any company. And for Microsoft, it just started gushing. And these are the engines that are making it all happen. Take the intelligent cloud, for example. To build that out, they have to spend a ton of money, that's called CapEx, on building these giant data centers all over the world. But that spending pays off big time, bringing in even more cash later on. So what do they do with all that extra cash? They do two main things for their shareholders. They pay a dividend that keeps growing, and they buy back their own shares. Buying back stock basically reduces the number of slices in the pie, making each remaining slice just a little bit bigger.
Okay, but it can't all be sunshine and rainbows, right? No company is without its challenges. So, to be fair, we have to look at the other side of the coin. What are the potential storm clouds on the horizon for a giant like Microsoft? There are really three big ones to keep an eye on. First, regulation. When you're this big, governments all over the world are watching your every move. That could slow things down. Second, competition is brutal. They're in a constant battle with the other tech titans. And third, cybersecurity. Being a huge target means you're constantly under attack. Now, investors are always trying to balance these risks against the company's amazing growth. And that's where you get valuation ratios, like a PE ratio. It's just a simple way of seeing how much people are willing to pay for the company's profits, keeping all those risks in mind. All right, let's wrap this all up. We've seen the story: explosive growth from the cloud, profits that are getting bigger and bigger, a balance sheet that's rock solid, and a machine that just prints cash. So how do we stack all that up against the risks we just talked about? Well, here's how it breaks down. On the one hand, you've got this incredible growth story. Profits are accelerating, they've got that elite AAA credit rating, and more cash than they know what to do with. It's a diversified business that spits out tons of cash. But on the other hand, you can't ignore the headwinds: regulation, fierce competition, and the constant threat of cyber attacks. Those are very, very real. So that brings us right back to where we started. Is Microsoft's business actually getting stronger? Looking at the data, the story is pretty clear. Over the last 2 decades, this company has completely remade itself. It's more diverse, it's way more profitable, and it generates more cash than ever. It's built on a stronger financial foundation than at any time in its history. Yeah, the risks are there, and they're serious, but the numbers show a business that is firing on all cylinders from an incredible position of strength.